Hey, good day, traders. Welcome to this video, number 3 in the series of how to trade like a pro. Okay, so just read this risk warning before we begin. All right, if you've read that. Okay, so today we're going to look at part 3, right? We're going to look at the process of trading. Okay, the process of trading. So let's just get into this. This is the main thing. This is actually doing the trading. So let's just have a look at this. Okay, so in the process of trading, there's two major factors, right? And those are the technical skills and the mental skills. Okay, so I've broken it down here quite simply that on the technical side of things, that's your strategies, which have got entry and exit rules, and that's mainly like based on patterns and indicators. And basically, technical skills or learning the technical stuff, it can be easily defined based on whatever trading strategy you will use. Okay, now the mental skills is a little bit more difficult, and this is where a lot of traders lose it because they don't have the mental skills, which this one, in as much as we can teach it, but you have to put it into practice. Okay, it's not just like a technical skill, which is so clean to say if price hits this point at this pattern, you do ABC. With mental skills now, it's all about yourself. And even as far as I'm concerned, trading is more about yourself. You're managing your own reactions to the market than it is about whatever the market is doing. Okay, so on the mental skills, we got our emotions, our psychology, state of mind, and our behavior in trading. So that's what I'm going to look more at today, the mental side of it. But of course, technical is always involved. We'll get there when we get into the 3 ways of trading. Okay, so now with the process of trading, on the mental side of things, this is the main thing because, like I said, your technical is pretty straightforward based on whatever strategy. So on the mental skills, the main thing which is going to affect someone's emotions is what the money means to them. That is like what they are trading. What does it mean to them? Okay. So people have got basic needs, rent, food, fuel, their lifestyle, whatever it is. So this is attached to someone's trading. So like it or not, you got to get this clear and see this when you approach trading to see what does this money mean to you. If it doesn't mean that, maybe you need money fast. Some people need money fast and then they think they're just going to come and trade and get money fast. Some people will reach a point where they need to extract money from the market because of these needs. Yet the market is not showing anything on offer, but they start seeing some patterns which are non-existent just to try and get money from the market. So does that happen to you? Do you need to prove to yourself or to someone? Do you feel the pressure of needing to prove that you can make money from trading? These are some of the things which affect people in trading, and you have to look at them, face up to them, and see, is this affecting me? Okay. Your current state of mind. So whenever you trade, your state of mind, you got to have a clear state of mind. So what is your current state of mind? Do you have a clear mind when you're approaching the market? If your mind is not clear, I would not advise you to trade. Have you got stress from work, university, college, or school, or some other studies? Is that clogging up your mind? You need a clear mind to trade. So if that is worrying you, I would advise you to take a break from trading. Yes, if you have limited time, maybe if you've got other work that you're doing, you got to give yourself, okay, with this one, if you're going to be a swing trader, maybe you're going to take a trade for a week or so, or something like that, you can do it on limited time. Even if you're working or that, you can analyze the markets even over the weekend or in the evening or whatever it is. You know, the markets are always moving, so it's all about, if you want to be intraday, that's where now with your time you got to check that to see that you have enough time. So on that one, on limited time, just check how much time you have to trade. Okay, that is also coming into your mental skills. Okay, do you have any personal issues that's happening in your life? Maybe there's a stressful thing, a tragedy, a loss of a loved one or something, some event. Usually when that happens, you got to take a break from trading, okay, so that you can have a clear mind. And this, even hedge fund guys, they normally see this, they see the performance of the traders go down. Maybe if they've lost someone in the family, or there's a divorce or something like that that they're going through, and they send that person on leave, right? Because they know that their mind is not right. So make sure that your mind is steady. And at times you could have just had a bad day, or you know, those kind of things can happen. You wake up with a bad start, you just don't feel right. I wouldn't advise you to trade. Okay, you gotta have a clear mind when you approach the market. Okay. Now, most importantly, like I said to you, trading for me, yes, it's about probabilities of numbers and your reaction to that. But most importantly is your behavior during trading, because you can find someone can be the best at analyzing the market, but executing trades now is where the issue comes in. You can know so much, but executing trades now, because as a trader, you need to know how to execute a trade and to have no emotions contradicting what you see in the trading. So you got to look at yourself, your behavior during trading. Okay, do you revenge trade? Have you ever seen yourself revenge trade? What is to revenge trade? When you place an entry, let's say you think this thing is going to go long, and you enter for it to go long, right? Then it immediately does a stop hunt, goes short, takes you out, and then goes long, and then you enter with a bigger position to revenge trade, to say I was correct, and you took my capital, I want it back, and then you find the trade actually ends up going short. So are you susceptible to this? Look at yourself during your trading. If you see, don't just lose capital or blow an account and not look back and say, what went wrong there? What did I do wrong? After I analyzed, was it just a trade which my stop was hit, or did I do any of these things, these bad behaviors? Did I revenge trade? Did I move my stop loss? Some people have this, because when you enter the trade, you told yourself if price reaches that level, you're going to be out. But now if you see yourself moving your stop, why are you doing that? You should not do that. So you have to monitor yourself, your own behavior during trading. Do you increase your lot size after a win? This is very common, because people begin to think they're invincible. After a couple of wins, they just increase their lot size and land up doing more damage than they would have gained. Okay, do you suffer with euphoria? This is like same like increasing your lot size after wins, meaning where you're now excited because you picked the right trade, or trades have been going your way, and now you get too overexcited and you forget that the market is random. You got to check yourself. Do you suffer from that, where you just place trades because you got excited? You got to check yourself when you journal your trades to see what happened there. Okay. Do you freeze? Freezing is usually the result when someone does not know how to exit a trade. They did not put a stop in the market, and now they do not know how to exit it because they never ever thought the market was going to go against them. So do you have a problem of freezing, where you risk maybe an amazing amount of your capital, and then once you see the market going against you, you just see it going and you expecting it to reverse, and it never does happen? Are you susceptible to that? So your mental skills, guys, this is the stuff which I'm saying you gotta get to grips with. Okay, you gotta see, what does this mean to you? What does the money mean to you? Each person has got a different state of mind when it comes to the market, when it comes to what they need from the market. I would say to you, never try and approach the market saying that you need money fast, and don't make your trading as your only source of income. Have something else you can lie back on. Okay, never try and extract money from the market when there is nothing on offer, just because you need to pay something. And this is where most retail traders get hit, because market makers know that people are desperate to try and make money, and they will just present some pattern which is nothing, just to crush someone. Okay, so most importantly, have realistic needs. Okay, you must have a clear state of mind. Make sure, check yourself before you're going to enter some trades. Okay, Is my mind clear? You got to check that. You got to see if your time is limited, like I'm saying here, you can maybe opt to be a swing trader instead of an intraday trader. If you've got limited time, you can say you will go for swing trades. Then that way you know that you can just check the market on higher time frames. Okay. Have you suffered any personal issues? Just a bad day? Just check yourself for all those things. Okay. But most importantly, during your process of trading, and we'll get to this when we go further in this slideshow. But just check: do you do any of these things? And if you do them, what caused you to do them? And you must avoid this at all costs. Okay. So let's just continue. As I'm saying, with these mental skills, so you got to be accountable to yourself. Okay, so you got to be self-aware and accountable to yourself on these three major points: what the money means to you, your current state of mind, your behavior during trading. Okay, so be truthful with what you expect, the money you expect to make, and what it means to you, because someone else who has got more capital or other sources of income, they can risk more, be more reckless, seemingly more risky in their trading, but their situation is not your situation. Okay, so don't compare yourself with the other traders. As I said in the beginning of this series, you can go back and watch that video, which was pro traders versus retail traders. You can go back and watch that video. So don't try and compete with anyone. Be truthful with your expectations. What is good for you? Okay, give yourself some time. If you stick with what I'm going to show you here, you will definitely begin to see consistent income, because making money is not the problem, but making it consistently is what we want you to do. Okay, so check yourself, check your current state of mind before you trade. If your mind is not sound and in it, just skip that day. Journal your actions when you see your trades that have gone through. Check your trades and what exactly did you do. Okay. So now when we dealing with the process of trading, before I get into the three approaches to trading, there are macro rules and micro rules, and I've divided these into two. I've split these in letters, and the macro rules I've given these letters, right, called years, and we will go through this together. I'll just type it here if you can remember this: years. So this is when you're looking at the bigger picture in trading, you must always remember years. What do I mean by years? Okay, let's just have a look. What do I mean by years? Is that you don't need to know what will happen next to make money. Okay, so you don't need to know what exactly is going to happen next in order for you to make money. That's a fundamental truth. Okay, it's a big picture rule. It's a macro rule. Okay, every moment in the market is unique. Okay, so it does not just mean that because on your strategy rules the last time this setup came, the market paid. That this time when the setup comes, the market will pay, because every moment is unique. You don't know who is in the market. You don't know who's about to take profit. You don't know who's about to enter or who's about to exit. So every moment is unique. It's just a higher probability, your strategy. So just because, like in Market Maker, just because it's at ID 50 level doesn't mean it's going to pay again, because the market, every moment in the market is unique. Okay, so anything can happen as well. Why is it that anything can happen? Because you don't know what every buyer and seller is thinking of in the market, whatever you're trading. So just know that anyone can do anything, anytime. Even the brokers don't know who is sitting on the outside about to make a move in the market. So anything can happen anytime, because you're dealing with people. Okay, so it's the behaviors of people. Anyone can do anything, anytime. Okay, and there's a random distribution between your wins and losses. So never think that if your strategy is a 60% winning strategy, never think you're going to have 6 straight wins and 4 straight losses or something like that. No, you can have 3 straight losses, 2 wins, 1 loss. It just varies. So just never become down if you get hit with a couple of losses. Don't freeze, and never become euphoric if you get hit with a straight line of wins. Okay, so this is the macro side. Remember, strategies are nothing more than just a higher probability detector. So your strategy is not gold, no matter what strategy. This is why some people stay looking for winning strategies. You will look and look forever and ever. Pick the strategy you're going to use, stick with it. It is not a guarantee that it will work. It is just a higher probability setup. Okay, so this is the big picture. So have this in your mind. If you have this in your mind when you're trading, you will never you'll never condemn yourself in terms of trading. You will never be susceptible to those errors which we spoke about just before. Okay, you will never suffer from those errors of freezing, because you know that anything can happen in the market. Okay, you will never suffer from being euphoric because you know there's a random distribution between wins and losses. Just because you won 4 in a row, maybe the next 6 could be losers. Okay, so now the micro. So on a trade by trade basis, each trade that you enter, these are the things I want you to focus on. I want you to focus on steps. Okay, these are the micro rules. So what do we mean by steps? Are your strategy rules met? Whatever strategy you're using, before you place that trade, have your rules been met? Do you have an estimated exit point where you'll be happy with the money, your take profit level, right? E, are your entry rules met? Don't enter before the entry setup has been confirmed. Make sure that your entry has been confirmed. Don't enter too early, don't enter too late. Enter when the rules are met. Okay. And P, did you plan this trade? Was it part on your watch list? You should have a watch list. As far as I'm concerned, if you're trading and you haven't analyzed the market in advance and had a predicted or planned trade, then you are just playing games. You should have whatever chart you're looking at, whatever you're trading, you should have some kind of an expectation, your prediction or your plan for what will happen on that chart, on that pair. So is this pair a pair which you planned to trade or predicted a movement? Is it in line with it? So check with that. If it is, doesn't always have to be, but I would recommend at least you've been planning to see something happen on this chart, right? And then you can go for it. And then last but not least, if not most important, your stop loss. So your stop loss, some people just enter a trade because they see a pattern, but they don't realize where their stop loss will be, where the exit point will be, isn't it? That's what happens with some guys when they freeze, because they never expect the trade to go against them. So, and this is why some people move their stops as well, because before they enter the trade, they do not calculate the cost of seeing if that trade will work. So basically, whenever you enter a trade, you have to know that if the market gets to this point, I know my entry, my setup is violated, I must exit. Okay, and that's what's going to cost you. Whatever that price level is the cost mark, which is going to say to you, right, now this is a stop loss, it's time to get out. This thing is not working. It's just like in business. If someone is running a business, they can run it, try and push it for so long. If it isn't profitable, they reach a certain point where they say, okay, now I think it's time to close up shop. So the trading is the same thing. So remember this, guys. This is like your fundamental basis. This is your prime goal in trading. Years and steps. I'm giving you this, and I know this will carry you. If you can keep this, regardless of the strategy you're using, if you can just have it in your mind that you don't need to know what will happen next to make money, every moment is unique. Because every moment is unique, it does not mean that your trade will work or will not work. Anything can happen because you're dealing with people who can do anything anytime. There's a random distribution. You won't win 10 in a row, you won't lose 10 in a row. I'm not saying it can't happen, but never be discouraged or become too excited if you have many wins. And remember that your strategy is just an indication of a higher probability. Okay. Then our steps, are your rules met? Is your take profit? You must have your estimated take profit when you're happy. Your entry rules, are they met? Sorry, your strategy rules, first of all. Take profit, entry rules, predicted or planned trade, your stop loss. It's just like, for example, if someone is going hunting. Okay, so when you're going hunting, you've got a strategy to say that we're going hunting to this area. This is the kind of game we're looking for. So that's like your take profit, to say if I get 2 kudos in this area, or if you're going fishing, you say if I catch so many number of fish, then that's my take profit. I'm ready to go home. You don't just go without an expectation. You can go and say, if I get 1 buck, one antelope, that is, right? Well, I'm from Africa, so that's why I'm speaking in these terms. So if you say, if I get 1 buck, I'm happy, I go home. So That's your take profit met. You do not stay zooming around in the bush. Okay, your entry rules met. Entry rules, just like in hunting. If the antelope is in good range, good sight, if the animal is in a good distance, a shootable distance, you know it's an entry rule, meaning it's a chance for you to take a shot at that kudu. It's the same thing in trading. If the entry rules are met, you know it's a chance for you to take a shot at the market. You know that, and what is it your predicted or planned trade? Is that what you're looking for? Yes, that's what I'm looking for. Is the type of animal I want to hunt. It's the pay which I've been watching, isn't it? So you've been stalking it. It's just like a lion when it stalks the game. It plans before it gets that game to say, if this antelope will pass this way, I'm going to stalk it this way. So you also stalk the charts and then you enter. And your stop loss is the cost of checking if that trade will work. So it's just like a hunter. Before he fires that round, he knows that the cost of me shooting this, the cost of this bullet, and the cost of his fuel going out there, he accounts for that to say, okay, how many shots am I going to give myself at this antelope? If I fire 2 rounds, it's not worth my while to try and shoot again. I'll wait for another setup. So the same with trading. You cannot just put everything on one shot. Okay, you cannot risk all your rounds. It's just like in hunting. You cannot risk all your ammunition just on one entry. Okay, so you cannot risk your entire account just on one trade. Right. So now, so let's clear that here, those steps. Okay, maybe I can just keep it there. Okay, so remember the 3 approaches to trading. These are the 3 approaches. We've got the mechanical approach, which is what I advise. We've got Confluence Trading, and then we've got intuitive trading. Okay, so mechanical trading is mostly for beginners. Confluence trading, those are like intermediate traders, and then intuition, these are like your masters. These are like your experts in trading. Okay, each one has its advantage and disadvantage. Okay, so with mechanical trading, you got your strict entry rule and pattern, right? Which is very clearly defined with your strategy. It's very strict. With Confluence Trading now, you'll be combining strategies. Like for instance, maybe you could be using something like trend lines and chart patterns, something like that. So when you see this thing is at a trend line and it matches your chart pattern as well as your trend line, then you will enter the buy. It can be even more than these 2 strategies, but even all your knowledge of trading. You have market maker, you have ICT, you can put it all in there in Confluence Trading to say that according to market maker, this thing says that I must buy. According to my trend line, this thing is at a trend line there. It's at a trend line. It tells me I must buy. And maybe what else? Maybe you've got some kind of a chart pattern there. You say according to that I must buy. Maybe ICT, you've got an order block and it's somewhere there, and you say, okay, there's a trend line. Market maker is saying this is level 1 up, something like that. So that's Confluence, okay, where you combine all the strategies. Okay, now when it comes to intuitive trading, like the masters, like I'm saying, these are like your black belt karate experts, something like that. This is someone who they just see how price has been behaving. Maybe they find it's broken out of a range or something, and it's holding or pinning, whatever they see something on the chart, and just by them just looking at that chart with not even a strategy, they can already see that, okay, this looks like no indicators. They can just see, okay, this thing looks like price is going up and it's about to break up, and they will just say, okay, I'm going to go long here. Okay, so it's just someone who's been trading for some time, and they can see it without even drawing lines or anything or having any indicators on the chart. Okay, so that is the masters, the intuition. Okay, mechanical, you've got a strict predefined entry and exit. Confluence, now here, your entry and exit can be debated on whichever strategy you're going to use, because maybe here you could be using 4 or 5 strategies, combining what each one says, analyzing what each strategy says. Okay, with this one, these are the disciplined guys. At times they won't even put a TP, a take profit or stop loss on the trade, but they'll just watch when they'll tell themselves when price hits that level, I'm out of there, and they do not hesitate. Okay, these are guys who have quite got the emotional skill. Okay, why I like mechanical trading is because it builds discipline in you. Okay, Confluence Trading, like I'm saying, if you have many strategies, they can give you many confirmations. With intuition, it's more of just like instinctive. And even like what I can say here, like I have one friend, one trading friend, and he told me that it's more like a hunch which he has, and he says he feels it even when he does business, that if he feels something hot on his neck, and when he feels that something hot on his neck, it can tell him that this is not a good move. And that's what he was just telling me. It's something which, and it works for him. So that's like instinctive to him, that once he feels that heat there, it's like something telling this won't work out. So, well, that's what he has, and he's seen it works for him. So I'm not advising you to do that. But some people just have these things where they just have a feeling of something. So that's intuition. Okay, mechanical trading, it builds consistency because you're doing something like a robotic. This is far much better than getting trading robots. So trust me, you will be being robotic in your thing. But because you're a human, you're far much better than a robot. Just like how with the chess thing, we've seen it, that man versus machine. I'm sure even currently now the best chess player in the world has beaten the computer. Okay, so you are much more effective than a robot. So, but you'll be doing things like robotic, but it builds consistency in you and confidence. Okay, what I don't like about when you take this under confluence trading, where you're using many strategies, is that you have a danger of knowing too much. You see what I mean? At times it's good, like there's this saying which is known as KISS, right? And when we say with KISS, we say keep it simple, stupid, or is it keep it stupid, simple, something like that. But anyway, keep it simple, stupid, meaning that at times you just overcomplicate things. We overcomplicate things by trying to put too many things together. So just keeping it simple, one strategy for me is far much better. I'm not saying that confluence trading will not help. At times it can help give you confirmations, but there's a danger of confluence trading where you know too much. Okay, so that is not good. You rather keep it simple, stupid, right? Keep it stupid, simple. I can't remember what it is. Okay, with intuition, there's a danger of being reckless here because you can become overconfident and think you're the Don, that you've been trading the markets for so long, but eventually you can become reckless. And this even happens with pro traders, guys. With guys who trade for big organizations, they lose money. They lose billions. Like the other day I was seeing, they said Warren Buffett lost like $8 billion at one time on a couple of trades. So there is that danger of being reckless. There are some guys who trade for big hedge funds and big firms that lose a lot of money. It's not just, that's why trading is not just about the amount of money you handle, but about your risk management. That's what it's more about. How much you can manage risk and make out of managing risk. So at times when you think you too much of a pro, you can become reckless. That's why I will come back to say, in as much as they say this is for beginners, I recommend it. I recommend mechanical trading because it eliminates debate. What you have said is your fixed rules. That's what you're going to do. With confluence trading, it's the danger of building a case where you, because your 5 strategies have all said that this thing is going long, now you become overconfident. You've built a case to say, oh, this is a double. Maybe you can have something like a double. Say, according to my chart pattern, this is a W. According to market maker, this is a peak formation low. According to what else? According to ICT, it's a retest of source. What else can we say? According to support and resistance, it's at support. So you start to build this case for this trade, and you think you're building a case to not be wrong, and you want to go long, and next thing you find, because what did we say? Years, we said you don't need to know what will happen. Every moment is unique in the market. Anything can happen. So now, because we know that anything can happen, if you want to be using confluence trading and you begin to build a case and then you over risk thinking that every strategy is saying this thing is going long, but because we know anything can happen, this thing can just go short like that and smash you out. Okay, so this is what I don't like about confluence. At times people want to learn more. At times traders want to learn more to try and be more certain of a trade. You'll never be certain of a trade. Okay, because people are random. Trading is all about random behavior. Okay. And then why am I saying 20 trades? Yeah, because basically when you're dealing with trading, you do not look at trading based on a trade by trade basis. Okay, when you're doing the process of trading, yes, you'll be dealing with each trade according to steps, isn't it? According to steps, according to according to steps. That is your strategy rules, your take profit level, your entry rules, your predicted probability, and your stop loss. Okay, so that's when you're dealing with the trade. But you must give yourself at least a minimum of 20 trades per lot of capital, and see how you behave based on any one of these. If you want to say, okay, I'm going mechanical, pick your one strategy, have your clear rules, entry, exit. You should have back tested this, which is what I'm saying, and see how that goes over 20. If you say, no, I want to use Confluence, have your strategies which you're going to use, see how you do over 20 plus trades. If you say, oh, I'm a master now, I just use my eye, it's fine if you've reached that level, but you must have proven this on back testing, that you can just enter a trade just like that with your eye, okay? Because doing it on the back test is different to doing it live, because remember, of emotions, those points which I shared on those on your emotions. Where is it? Let's just go back there, right? What the money means to you, your current state of mind, and your behavior during trading. So remember those things when you come to the actual trading. All right. So I would say to you, go for mechanical, and there's something which I have developed. If you want, you can contact me. And this is a proven way of trading, and I call it the 15 trade rule. So this is for retail traders, which maybe you don't have as much capital to last 20 trades, although I would advise 20, but I've developed a 15 trade rule, which is pretty much good for retail traders, and I've got it all on an Excel sheet, regardless of the strategy you're using. Okay, but if you come, I will teach you the market maker strategy combined with ICT and some other basics of other stuff, just to get your eye into what trading is about. And you follow that 15 trade rule, and you tell me how you will do. You'll see. I'm sure you'll see a turnaround in your performance, in your consistency in trading. Okay, so guys, I would say just stick with mechanical trading. I'm not denying Confluence or intuitive. Confluence is good as well, but I would rather you be more mechanical in your trading process. Okay. Now, just something I want to add on as we go, which will just kind of summarize what I'm speaking of here. As I was saying, you pick what is right for you. So I don't know if you guys know Pele. I'm sure if you're into football, you know who Pele is, right? So you might say, what does this have to do with trading? Okay, so Pele basically is, for me, is the greatest football player ever. If you think otherwise, it's your own fair opinion. But what happened is that when Pele was young, in 1950, he watched his dad, and a lot of people cry when Brazil lost the World Cup, Football World Cup at home to Uruguay. And then there was something that happened, that there was a certain style of play, which was known as the Jinka Style. And that's like the entertaining, dancing kind of skillful play, which Brazil used to do. But it had been kicked out of their way of playing football. And then when Pele came as a youngster, 17 years old, he wanted to play that style of football, which his dad had taught him. And it's what he knew, but they were taking more of a Western style of football, more tactical European style, and it wasn't working for Brazil. But in the World Cup, with a knee injury, Pele won the World Cup at age 17, playing the Jinka style of football, the entertaining style. And really, that's where you can see there's a picture of him there crying, because he was a youngster. It was his first World Cup. I think it was his first World Cup at 17, youngest ever player to win the World Cup, not just as a squad member, but being someone who actually single-handedly sort of won that trophy. So what am I saying? Even in your trading, in as much as I've given you all this advice to say, take mechanical, take Confluence, remember, like I said to you, what does the money mean to you? What is your state of mind? What are your expectations? What is your behavioral pattern? Because someone else, their behavior will not change after 5 wins in a row. But you have to check yourself. Does my behavior change? Do I begin to over-risk after I win? You need to check those things. Am I able to hold trades for a long time? Am I a swing trader? Can I do swing trading? Can I do day trading? Can I do scalping? What works for me? So you got to see yourself as well. In as much as you test the strategy, you got to check yourself and see, right, what is your Jinka style of trading? What is your skillful style of trading? Okay, so something which is unique to you, like Pele, you saw that this is how I play. If you try and make me play a different way, I cannot play like that. And Brazil, eventually the whole team started to say, no, we got to play this way. This is how we know how to play. This is how we love to play. And this is how we are good at playing. Okay, so stick with what you have tested and what works for you. Whatever is your Jinka, whatever is your natural way of doing things. Be self-aware. Okay, like Pele was aware that this is how I play with freedom. I cannot play if I'm not free and skillful. Okay, we'll end with this quote from him. It says, success is no accident. It is hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing or learning to do. So I'll say likewise, even with trading, it's no accident to be successful. You got to have hard work, perseverance, learning, studying, sacrifice, and most importantly, I agree with, you got to love trading. If you don't have a joy in looking at charts and that kind of thing and entering trades, then it's not for you. You got to have a joy for trading. I'm not saying you can't do it, but I would advise you, if you can find joy in doing it, checking up charts, chances are you'll be a lot better. Okay, so this is the end of this recording, guys. I hope this has been helpful to you. Just remember, years and steps. Okay, don't forget that. And just watch this video over and over. If you need more assistance, you can contact me, marketwisetraders at marketwisetraders.com. Okay, marketwisetraders@gmail.com. I think all the links, you will see them after this. So happy trading, guys, and may the markets be with you.
Learn, then earn money online. You control your money. You control the risk and the reward. Start from as little as $10. Stop losing to get-rich-quick scams and pyramid schemes. Learn a legitimate skill of online trading. Already a trader? Stop donating to brokers. Become independent. Stop relying on signals and careless account managers. Learn to trade the market maker way. Take our course and follow the rules of big banks and smart money. Get wisdom. Get understanding. Get wealth. Contact MarketWise Traders today.